All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, June 27, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets had a nice pop here. Spiders up 1.1%, triple Q's up 1 3/4, Dow up 62 basis points in the Russell. Green as well, reversing some of those losses from yesterday, up 1.44. So we talked about that trend line there on the Russell, and it did manage to get a pop off of that after that really weak kind of close last week and really yesterday too. So Russell recovering a little bit here, but overall, again, still kind of the triple Q show for the most part here. So right up 1.72%, basically testing that 20 moving average, and it is getting a bid here. I still think markets need to do some weekly consolidation here. If we look on the weekly time frame, you see we went up into that 7.5 retrace, pivot high, and we look at that 20-week moving average there. You're pretty extended from that. The last time we were this extended was August 2020, and we had a pretty good correction there when that happened. But you can either correct it in time or price. So either way, market's still pretty overbought here on the bigger time frames. But we got a nice little one-day bid. Now, remember, tomorrow, Jay Powell will be speaking, so that may be market moving. Right now, it's hard to say. There should be some end-of-month rebalancing. If you look at, the performance between stocks versus bonds, specifically big tech, those portfolios got to be balanced out, so we could see some profit taking in big high flyer names like Tesla. We've already seen a little bit of that. We may see a little bit more of it. Nvidia, obviously a big one. I think we've already seen a little bit in AMD for sure, for certain stocks like AI, down from 48 down to 32.50. In really the last 7 sessions. So seeing some of those high flyers come in, and you may see a little bit of rotation into bonds as those look a little bit more attractive here, especially with a weakening labor market. We've had 3 weeks in a row of, I think, over 260,000 jobless claims. So that's something to look into. But right now, on a technical basis, we're just looking at the charts here. Pull back into the 20 DMA, and that held for now. So nice pop there. And to break it down kind of on an hourly, you're just kind of into this zone here, and that's where we pulled back at the end of the day. Powell's speaking tomorrow. Was he going to, push the market down? I don't know. It's hard to say at this point. If we look at the SPX, which I did some work on here, since the SPY paid the dividend recently, again, you're going to see that that head and shoulders still technically in play. You did have kind of a nice breakout though today. So if we look at the we go back to an hourly here. You can see there's a little bit of a falling wedge there from the highs, and you got a nice pop through that. So nothing terrible when you see that. But we'll see what we get tomorrow. Now remember, like I said yesterday and really last week, by tomorrow, by the time Powell's done, if he doesn't crash the market, we're probably going to be, volume's going to be very dry, and it's been dry already. It's already very dry. 71 million shares today. Yesterday, including after hours, is 72 million. So don't expect a lot of action. And when you get this type of move here, we had a little bit of a gap up. We attacked a gamma wall. Retail buyers are able to just buy any dip. And, when the volume is light and there's no institutions out there to sell, they can push it up through that gamma wall. And you see we had a nice little gamma squeeze here. So be aware of that. As volume dries up, you can get a neutral to upside bias. Although at the same time, if they want it lower, it doesn't take much money either. So just be aware of that moving forward. Again, next Monday, half day. Tuesday will be off. I would expect as soon as Powell is done tomorrow, all the institutional traders are going to be gone. All those big boys, the hedge fund managers, they're not going to stick around. They're just going to do what they have to do, turn the algos on, tell the JV traders to do what they got to do to accomplish their goal by the end of the week. If they got to do some rebalancing, they'll do it. But that's really it. So again, we'll just take it at face value right now into the 20 moving average, and that held for now. So we'll just continue to watch that. Triple Qs here. Again, basically the same thing. We already talked about that. Dow. We talked about the 50 MA yesterday. We got a pop off of that as well. Yeah, if that pushes up here, you got a little gap window at around 341. So that will be kind of your next logical area. And the Russell, obviously, we touched on. That did fill the gap from the 22nd. It looks to me, let's call it 186 would be kind of your next big area. 185 to 186 on the Russell. That's just a daily chart level there. Semiconductors had a nice push today. That really led the charge up 3.17%. We talked about AMD getting a little bit of a bounce. I would have liked to gap down in this to buy, but it didn't quite give us that. Still could happen over the next day or so. Obviously, NVIDIA back up 3% there. Intel up nicely. KLA 10 core, nice pop there, up 4%. Applied Materials, new 52-week highs, up almost 5% a day. So semiconductors getting a nice bid there, and that obviously does help tech out. IGV also holding the 20 MA up 2% on the day. Again, helping tech out there. Dow Transport's also holding up, so that got to our level. So 15,293, actually overshot it by just a little bit. This does not mean it's a short right now. I just want to make that clear. Just a target, but there you can see we went under that pivot. And that weekly red bar high. We'll be interested to see where that closes the week. If it closes the week above this, that's a positive. So, if they defend it by the end of the week, we could close back down. Definitely, something that could happen. But right now it is above that, and we'll respect it here for the time being. But Dow Transport's having a nice day. We talked about that little inside bar. And before I mess up the charts, there we go. The little inside bar and a nice pop there. So nothing terrible there on the transport. We had a little bit of uptick in volume there too. So not a bad day. Let's look at the Jets here. Yeah, 4.41%. That's almost at a 52-week high as well. That should still have some resistance at double top. There, it looks like I got a trend line here. Yeah. Look at that old trend line there. That is, strangely enough, that's an old head and shoulder pattern. So it is slightly ascending, and then there's your 200-week moving average. So we'll watch that. It'll be interesting to get, we'll probably get a pierce here of the 52-week high. And it wouldn't surprise me if it wants to go test that 200-week moving average. So maybe not today or tomorrow, but that could be a level there to watch on the JETS. Anyways, let's get over to bonds here. And so the 2-year yield continues to be strong. They tried to take it down this morning and right back up here, right back finishing at 4.766. This is set up for a run at 5. If you guys are asking me when would we see more volatility? When is this kind of rally going to come into some serious headwinds? When this gets above 5%, that's when you'll see the market start to question it, especially if it does it before the next Fed meeting. So if bond yields break out before the next Fed meeting, that's where you could see the market start to get worried. Why? Because this is where 5% is where the Fed funds rate is, and this is where it stopped out, or this is where it's the yield stalled out back in March because of the bank crisis. And when did the stock market stop selling? Right in the middle of March, right? So again, that's kind of your area there. So I'm intently watching 5%. If we crack that, especially before the next Fed meeting, it's going to put pressure on the Fed. That's really that simple. But right now they're below it, and that's why the market can rally. 5-year. I like this. Man, this is not a bad bull flag here on the 5-year. So that's setting up for a move into 4.2, possibly 4.3. 10-year, you guys know I cover this every day. We get above 3.85, it's up to 4. 30-year, a little bit weaker of a pullback pattern, but if you get above 4, it's going to 4.2. So really simple there. But bonds are interesting. It's also interesting too because that the risk reward here of owning bonds versus stocks is getting very lofty, especially those big tech names as we get into the second half of the year. Anyways, let's get over here to XHB. That got through our target here. I want to talk about ITB though. New all-time high for ITB. Interest rates above 5%. What can you say? So new all-time high there. We talked about 83, and it went through that here. Pretty good volume. Maybe it's a blow-off move. I'd like to see a little bit more. But what a power move there. And then XHB getting through 78, which we talked about, 78, 79. That's going into some resistance, though. And then you got your pivot right here at 80, 82. And then this is where you broke down. You had essentially a failed bull flag there. Not a flag, but bullish consolidation on the weekly, which failed. And that's your area pivot high and all these pivot lows. So it is into some resistance here, but the trend is up. It's very strong. So you got to respect it here. Doesn't mean it can't go higher. But either way, just ridiculous market right now. especially those home builders there. We'll see how they fare in the second half of the year, if and when the economy starts to turn around. But right now, they're very strong. VNQ, that's up 1.23%. Nothing's changed there again. Below 84, it's still weak. Nothing to really add to that. XLF up 80 basis points. Still don't like that on the weekly bear flag look. KRE got a nice little bounce today. That helped out the Russell, obviously. Still not a great chart right now. Same thing with the KBE. And broker dealers holding up much better. Again, getting a little bit of a bounce off that 20 MA. That can still hold up, and that can still get to 490 as long as it doesn't break this pattern. So that is holding up okay. All right, anyways, let's get over to commodities here. Crude taking a little bit of a dump today. Nothing too major. So that did head lower. Again, if we break this trend line, it's down to 64. If that breaks, then it's going through 60 and probably down to 50. So just watch for that. But outside of that, it's been a tight range here. XLE was green today. That actually had a decent day yesterday, too. A little inside day, but still below the moving averages. You guys know my thoughts on that. It needs to go lower. Same thing with XOP and OIH, although OIH still is the outperformer of the group. Just below that 280 area right now. If you get above 280 on a weekly close, that does pique my interest a little bit, because you'd be above the 50, 20 moving average and this kind of point of control here. Still, though, that's just kind of step one. You really still got to get above 290, 282, right? So that's your inside bar, weekly inside bar pattern. But you have a smaller inside bar inside of that, so it makes it complicated. But right now, 280 is the level to watch here in the near term. All right, nat gas stalled out a little bit today, just a sideways day. Contract will be rolling over shortly, so volume's going to decline here. The U contract was down a little bit more here, but really just an inside day there. Nothing to really make out of that. That's still holding up fine. Dollar index also lower, as you'd imagine here, down 20 basis points today. Nothing crazy though, right? But you do have a bearish inside bar now on the DXY, and they kind of fixed my chart, and then now it's kind of back to being crap. So we're going to go back over to trading view here, but there you can see red bar inside, right? So that is potentially setting up for a move lower. Next area be 101.50. And then if you get through that, we'll look at a Pierce maybe 100. So maybe it gets down there after all. But right now, that's the level. That's what we're watching there pattern-wise. Gold here. So it's a little different, right? So gold, and again, gold's not getting a bid despite dollar weakness. Leads me to think there's something going on. Maybe is it just end of quarter stuff? Is it just seasonal stuff? Summer doldrums, possibly. We'll see what goes on here, but gold will need to test 1900, and then after that, it's down to that 1850 area. Nothing has changed there. Silver getting a nice pop here, then came off the highs. Maybe that can get to 2350 here in the near term, but if it starts to chop around, it's setting up a base to go lower, and 22 will not be support if it does. Platinum here, starting to build an inside candle. I like this level here, but it needs to get going. I don't want to see it go sideways. I want to see it go up. But right now it's holding that level. So we'll just leave it at that. Nothing to do with it now. And same thing with palladium, starting to build a bearish inside bar there on the daily. If you can get back above this red bar on a close, then we could talk. Maybe we'll watch it for pattern. But outside of that, still on the weaker side. And then copper here, also pulling back a little bit more today. That still needs to get to 370. And then obviously, I'm still looking for 340 there. And this copper, right? I called for 370, 375 for like months, and it took it a long time to get there. And now I'm saying 340, and I'm starting to think it might take months to get down there too. But either way, that's the level I'm watching on copper. Over to Bitcoin. Lastly, Bitcoin's still holding up well. Nice little inside bar building. I think it just needs that moving average to catch up, and then you'll get to 32.5. By the way, some of these Bitcoin equities too are confirming the move. Marathon's got a nice pattern there. That actually took off a little bit today, so that was up nicely. We had that kind of weekly. I can get my charts. There we go. Nice weekly inside bar there, and then it got a pop a week or two ago, and then just kind of consolidating there. Nothing terrible. Riot kind of looks the same. MSTR a little bit on the weaker side. Oh, actually, it's shaping up a little bit better. But they're holding up okay. So Coinbase finally getting a reversal there, and that's still going into some resistance here. But the Bitcoin equity is looking a little bit better. Ether, not a terrible pattern there for an advance. I think it needs to do a little more, but that's not terrible for a pop to 2,000 there. So, Bitcoin and crypto looking a little bit better here. As of late, obviously. Anyways, guys, back over to the spiders here. Nothing really going on. Again, 20 moving average held, until proven otherwise. We'll continue to watch that. Remember, Powell talking tomorrow. Volume is going to be light. My advice, if you're a day trader like I am, don't overtrade this week. There's going to be people on YouTube live streaming, day trades all day long. This is not the time to be doing that. This is more of a time to take off, only take the best setups here, as there's not a lot of institutional participation. And when there isn't that, there's not a lot of movement. So anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.